Welcome to Explain the Charts. Today we're tackling USDCHF. Recent news indicates rising trade tensions and modest USD weakness, potentially putting downward pressure on the pair. Let's start by examining the daily chart for the bigger picture. Notice the recent dip below the 0.8956/64 support level mentioned in several analyses. The daily candles show a clear bearish trend, with lower lows and lower highs. This suggests potential for further downward movement in the short term. Now, let's switch to the 1-hour chart to analyze shorter-term trends. The 1-hour candles provide a more granular view of recent price fluctuations. We can see several instances of minor reversals and consolidation periods within the broader downward trend. Focusing on the past week's 1-hour chart, we can better identify these smaller patterns, which could help traders spot potential entry and exit points. For example, observe this period of consolidation followed by a significant drop. Short-term traders could have utilized this information to secure a short trade. Switching back to the 15-minute chart allows us to observe even more short-term price fluctuations. These smaller candles will show more frequent and abrupt changes that shorter-term traders can watch for. It's important to note that the 15-minute time frame introduces higher levels of volatility. The high frequency of the 15-minute candles can be valuable in identifying support and resistance levels with more precision. This level of granularity is very useful in high-frequency day trading. Remember that trading with such volatility requires discipline and a well-defined risk management plan. Let's recap some key price levels. The 0.8956/64 support, where the market has found temporary support in the past week. If we see continued upward momentum in the USD or a sudden spike in demand for the USD, then the 0.90 support might become a significant resistance level. A break above the 0.91 level will likely be followed by a short-term bullish rally, with traders potentially taking long positions. On the other hand, a continued downward trend below 0.8956/64 could signal further bearish pressure, with the 0.89 support area and, perhaps, the 0.88 area to watch for potential support levels. Such downward movement is more likely if USD weakness continues or there is a significant economic downturn which would decrease demand for USD. However, the overall direction and magnitude of the price changes will highly depend on news and market sentiment. It is important to note that these predictions are not guaranteed. The market's dynamics are influenced by many factors beyond technical analysis. Consider these observations alongside your own research and risk tolerance to form a well-rounded trading strategy. Always manage your risk and only trade what you can afford to lose.